Morning, everyone. Hope you can hear me okay. So, just to let you know on what we're watching in here is, I wanted to go over misnomers. So, what I mean by that is everybody thinks there's a magic bullet and that it's going to work. So, that just one thing. And like I've said over and over and over, you got to combine it with a number of factors. So, like today, many might say, oh, the bonds are up. Why isn't the markets up? Well, the point is that we watch correlated indexes, we watch trend lines. So, number one, yesterday and the day before, I was showing a scan of stocks that were at least 7% above their 20 moving average. You saw me share it in the central room and in the chart patterns mastery room. And as you see, they worked. And it wasn't just Visa and Apple of it. CVNA. There you go. Right to the moving average. Look at this. And this was posted yesterday. How about Walmart? Yeah, that was posted yesterday. So, I mean, that's what you pay me the big money for. But just to let you know on how to look at these, I had more people today, and I don't like to poo-poo anybody's idea, but I do poo-poo if somebody thinks it's a magic bullet and they're getting it from somewhere on Twitter. So let me show you what we're talking about. Number one, if you hear that, oh, there's a big NASDAQ short and they have to buy NASDAQ futures, well, combine it with other things. So I'll show you what we're talking about in here. So we take this right here. Just want to show you what we're talking about. So just take it right here. What would make you think the NASDAQ is going up other than somebody's theory? So, and I'll show you what we're talking about. Yeah, maybe on a daily, it's going to go to an all-time high, but I'll show you the warning signs. These were all over our nightly video, all over the central room. In fact, central room, if you tuned in here, I showed 3 trades yesterday and all 3 trades made money, especially Visa. That seemed like a layup. Why was Visa layup? If Walmart's going down, why the heck should the credit card stocks go up? In fact, Visa was up. We shorted it. So we already took our profit. So Visa was a good one. But getting back to it in here, all about combining different factors. So what are we talking about? Well, somebody pointed out that the Dow Jones Industrials were coiling. Now, most people, it seems like, always think coiling means you go up. I say coiling means to respect the break in either direction. Now, keep in mind that we have been showing warning signs. So what's the first warning sign? Well, the first warning sign is the German market finally had a crack. You would think with geopolitical stuff, somebody would care. So it was down 450 yesterday. Number 2, you had the Japanese market down 1,000 points over 2 days. So you're starting to see world markets start to have a little negative divergence. But back in the U.S., you see the triangle, then you see the Russell with a possible triangle. So a big triangle and then a little one. The key is that once these went down, it's all probability. That's how I stayed in business for 45 years. When you saw that, then the probability is this hourly trend line was going to break to the downside, not the upside. So forget all this stuff about, oh, they're NASDAQ futures to buy, it's going to soar. If other indexes are breaking down, then this is more likely to break the trend line on the way down. That's all probability. Number 2, oversold now at support. This is not where you short the markets. Maybe they go lower because the Dow refuses to bounce. Look at that. Refuses to bounce. In fact, now it's where it was February 3rd. So I'm just telling you, you need to combine multiple factors to make money in the long run in this business. So multiple factors. So now what are we watching? We're going to watch the moving averages. I know I've obsessed about this for everybody and they've been working. So what are we talking about? What we're talking about in here is this. The blue line, the purple line is the 20. The 50 is the red. That does not mean it's blindly support or resistance. As you see, it's worked horrible in here as support and resistance. It hasn't worked at all. It's price support and resistance that matters more. So when this broke right there, and the Russell is already under it. It's under the purple. It's under the red also, for that matter. So it's under 2 moving averages. Eventually, these all move together. So go and take the NASDAQ. Heck yeah, it's way above the purple. How about the ES? Well, it's way above it. Not by much. How about the Russell? Like I said, under it. Dow, finally under it. Transports, under it. So the probability is the indexes that aren't under it are going to go to it. That's the probability for you. That's why we were short. Or just keep that in mind. That's why we were short. And that's why we cleaned up. So, and I know every site, it seems like all they do is show long ideas. And don't get me wrong, in the long run, markets go up. But when there are warning signs, you got to respect it. That's all. You got to respect the stock market. So I see so much lack of respect when the markets go up. So, and then most of those people I've known over 45 years are not trading anymore. So let me show you this. Dow Jones under this. If it gets under that, right there, and this on the right gets under that, the 50, not just the 20, but the 50, and the Russell already under it, the transports close to it. So I'm just telling you, if they go under it, then why the heck shouldn't the NQ go to it? Why shouldn't the ES go to it? Yeah, and you see what's happening. The market's taking the drop. And it should. So I'm just telling you that it's all probability. So that's one of them. And it's adding multiple correlations. That's what I'm here for, to go over that for everyone. If you're watching the Goldman Sachs down $25, why should the NASDAQ go up? That's what I'm telling you. So now we're going to be watching the February 3rd. Just go and put February 3rd on your screen. February 3rd. Then on the right, where was the Russell? Where's February 3rd? February 3rd is right there. Right here. Oh, where's the transports February 3rd? Transports February 3rd. Survey says right here. They're not there yet. But just keep in mind when I'm showing that, just keep in mind where the ES is in relation to February 3rd. February 3rd was here. Yeah, 100 points lower. More than 150 points lower. The NASDAQ, February 3rd. Right here. It was 1,000 points lower. Now, right now, it's oversold at support. Don't get me wrong. But if these stay in this February 3rd zone, then I think these are more likely to go to the February 3rd zones. That's what it's all about probability. So just want to show you that. So that's one of them. So one of them is correlated indexes, warning signs. So that's one. You're not seeing the Russell bounce. So even though we're talking about on an hourly chart that the ES is oversold using the MACD. On the other hand, the Russell is oversold and it stayed down. So it keeps going down. If this was oversold on the left and the Russell all of a sudden was here, well, that's different. Then I think you'd have a big bounce, but you don't see that at the moment. You don't see the Dow bouncing. In fact, it's on its low. So what makes you think the NASDAQ's going to have some massive rally? So that's number one. So I wanted to show you these misnomers. So let me show you a couple more. Now, keep in mind, we were short, so we were fine. But I want to go over some other misnomers. One of them is the call wall. I'm sick of hearing about the call wall. On the other hand, don't get me wrong. It works great with the cash-settled options. So the SPX, yeah, it had a call wall at 6,100 and it worked great. cash settled. The cash settled indexes work great with the call wall or the put wall. Individual stocks work horrible with the call wall thing. It's evenly dispersed that matters. If you have a lot of open interest on the calls and the puts, that's spread trip, more likely to be spread traders. That means they're more likely to want to take it to the strike. On the other hand, 1 point strikes are not as reliable. But theoretically, yeah, this could go to 140 because it's got such evenly dispersed. The key is the evenly dispersed, because you're looking at if the spread traders need to unwind. I was on the floor a long time. I know that. So right now, if I'm long 1,000 of the 140 puts and short 1,000 140 calls and long 100,000 shares of stock, and this gets up to like 139.5, I'm starting to worry about pin risk. So I'm going to have to sell the puts, buy the calls, and sell the stock. Most spread traders are long the puts, long the stock, short the calls. Why do I say that? The Robin Hood effect. Yeah, they're always buying more calls than puts. Everybody you know always buys more calls than puts. So the market makers have to sell the calls. They buy the stock as a hedge, but that's not a pure hedge, so they have to buy the puts. So the market makers are selling the calls, buying the puts, buying the stock. So they're rolling into a delta neutral. So, but if it gets to 140, they're screwed. We've seen it over and over and over. So close to 140, you don't want to take that risk. So just that's why these have a tendency to go there. NVIDIA, that's a big one. Even though it's a 1 point strike, it might work. But I thought what we do is go back to prior expirations, the third Friday of the month. And the third Friday of the month, the reason is because that's usually when you have the most open interest. Now, the other thing, like I said, I show this on the videos every night and Sunday night. What am I talking about? I go to box charts and I do Sunday night charts for my subscribers on the Chart Patterns Mastery. And this is what I showed on the video last night. Not only did we have warning signs, but historically, the last 70 years, markets have had a tendency to go down this week. That's over 70 years. Most of the time, it's green or it's a yellow. That's historically weak. And you're combining that the markets had warning signs. So we're combining it. I mean, we're not just taking one thing. So I want to show you that. Now, how about evenly dispersed on some of the biggies? Most of these seem to stick at their open interest. I mean, the round number. Another good question is, how do you know how much is a lot? Well, if it trades 7 million shares, 15,000, 11,000 isn't bad. If it was like 2,000, it wouldn't matter. So this could pull it. The 2.5 wide and the 5 wide strikes work a lot better. So just to let you know that. But this thing about just looking at one side, looking at calls, is not as reliable as looking at evenly dispersed. So let's go back to it and I'll show you. We're going to take the rewind function. And we're going to take the rewind function. And by the way, maybe that website's right about there has to be a buy of NASDAQ futures. Yeah, maybe. But we made our money on that break. That's it. We made the money on the break. Now it's oversold at support. So we made the money at the break. That's all I care about. But let's go now, and I'm going to take off this on the left. And all we're going to do is we're going to go back to Apple, let's say. We're going to go to a number of them. I just want you to know, do they work? So we're going to go into here and go to the on demand. That's the rewind function. And we're going to go to different third Friday of the month. Now, just to let you know, the slower the day, the more likely that things are going to get pulled to the strike price. The other thing is that you have to understand is that just keep in mind in here that the slower it is, the more likely it is to go to the strike price. That's number one. So number two, you combine them with charts. Don't get me wrong. But go into Apple, where was, I can't tell you how many people said 250 had a call wall. So did 255 for that matter. Round number. It can do whatever it feels like it on expiration. That's what happens. So I'm just telling you, open interest does matter, but combine it with a chart. So this one, guess what? The call wall worked. There wasn't that much open interest, so it worked. Let's take the one the month before. Like I said, the ones with 2.5 wide strike are much more likely to work. And once it gets to 250, 2.5, you got to look at the round numbers, the 250 and the 255. That's just the way it works. It's pre-buffering on the upper left. Let's see what happens. All right, 225. Round number. 18,000, 25,000. Where did it go? Here we go again. Big open interest here. It didn't go there. There were a lot of people when it closed the night before 228 said, oh, it's going to 230. No, it's going to where the charts tell you and you combine it with open interest. I bet if you put a chart in here, it looked pretty crappy. Yeah, there you go. Looked pretty crappy. Looked like if it didn't hold here, it was going to 225. So I'm just telling you, you could go over and over and over. Let's go to the month before. I like back testing. Everybody knows on the sites I like back testing. And like I said, in the Essentials room and the YouTube Live, I posted 3 trades in the Central room. I posted 3 trades in the Chart Patterns Master. I stuck my neck out and posted them in both of them. And we were 3 for 3. So just keep that in mind. All right, Apple. Round number again. Where was the open interest? 235 and 230. What do you notice? This has a habit of going to the 5s. Chart. What did the chart look like? It looked pretty good. It gapped up on you. So when you see a gap up, do you think it's going to 230? No. So, I mean, it looks pretty good on a chart. So Apple has a habit of if it has a gap, it stays up. And it went to the strike. So let's take NVIDIA, because I've watched more people lose their ass trading NVIDIA by thinking that it's going to the strike price. So I'm just telling you, 1-point wide strikes are not to be trusted. That's all I'm telling you. Aren't to be trusted. And the reason is for a stupid reason. It's because there's so much open interest at different strike prices. So back here, I saw more people saying it was going to 150. Let me show you. I mean, I'm here all day. Look at that call wall. Yeah, it went down 5 points. How about 145? Yeah, it might, but it didn't work. How about 140? It's got a lot. In between, you would have lost on everything you would have done on that strategy. Like I said, a 1-point strike is much less likely to work. One of Adam's favorite in our Chart Patterns Master is Microsoft. Microsoft really goes to its strike. It's amazing. 415, 415, down 11. So where was the open interest? 420, 415, and 425. But once it started going down, it got sucked to the lower strike. How about the next month? You're going to find Microsoft has a habit of going to a round number. So let's see. All right, where's the biggest open interest, if any? It's December. You're not going to have as much. Well, you had 430. All right, I got to move this around. Did it have any more? You had 440 and you had 435, it didn't do a thing. So it's not perfect. That's what I'm telling you. But overall, and like I said, the Christmas one doesn't work as well. Never has. January 17th. Let's see where it went. Survey says, I know where it went, but let's let the pre-buffering work. There. Yeah, I went to 430. Look at that. But what's interesting about that, see the open interest? See that open interest? There were more sites that said it was going to 435 or going to 425. Just keep in mind in here, you combine the chart, but when it was 435, we were looking at 430. Why? Because there was no open interest at 435 evenly dispersed. So when it got to 433, we were playing it to 430. See that? So you didn't short here. I'm not a hero. It's on the rollover over the ATR trailing stop. The probability was it was going to that strike. Now, that might only be a 1.5, but that's good money. So just to let you know, those things work. Go to October. That's always a good one. Let's see what happened then. Not enough open interest to move it. 17 million and 5,000. That doesn't tell you a thing. You got to have gigantic. So I'm just telling you that big open interest relative to its volume and relative to the time of year. September, a lot of times that triple witching, it has a big one. Let's see if it had a big one. And then I'm going to show you the SPX AM. All right. 10,000 and 6,000. Now, you might say, yeah, it sort of worked, but I'm telling you that was not reliable. And why? Because it traded 50 million shares. So you got to have gigantic open interest to matter. But guess what? It still mattered. Isn't that amazing? What had more open interest? The 435s? What was more evenly dispersed? The 35s or the 40s? The 40s had 12,000 and 2,000. 35s had 12,000 and 6,000. So I'm just telling you, it does, that kind of thing works. So how about now? What do you think? Well, number one, I think the markets look like dirt. Number two, though, Microsoft acting great. Where is the big open interest? 420 and 415. See that? And that's still not that much, but it's not bad. So 420 and 415, which means if I see a bull flag, I'm more likely to play it to 420. If I see a bear flag, I'm more likely to play it to 415. So let me show you an interesting scan. This is something you can just, anybody can do. So I'll show you what we're talking about. You take this scan, my main list, and all I'm doing is I'm taking open interest. That's it. Now, this is going to look like a lot. I'm taking open interest of at least 2,000 because like a HubSpot might not have a lot. Days till expiration 2 because I'm doing this on a Thursday. We can make it 3 so it's over the weekend. And I want the options between 10 and 6. When all of them didn't have splits, the Amazons and all that, you could have 20. All right. It's going to be a lot. It's going to be at 500. Yeah, 2,000. Okay, 2,000, but all stocks. Let's put this as my main list. My main list is the most active. I didn't know it reset it. It's going to be like 500. Yeah, 492. It's always around 500. You sort it then by symbol. And then you look to see if it's calls and puts. There. And you add in here open interest. So you see Apple. Does it have puts also? Yeah. So you know Apple goes on your list. Adobe, the 450 puts. Yeah. you could have that in there. So AMD you can have, but it's a 1-point strike, not as reliable. Amazon, sure, you put that in there. ARM Holdings, sure, you can put that in there. The problem with the ARM is most of its open interest at 3,000. Yeah, not bad. So you can do this scan even though it's 500, but you can do it quick. Now, stocks that trade overseas, like Baba and Baidu, ADRs, American Depository Receipts, not as reliable. And you'll go through the ones you know and love. 1-point strike, take it off. 5-point wide, doesn't have any puts. Coinbase is related to Bitcoin, so I wouldn't even put it up there. You got to be picky. But keep in mind, you're talking about a very, let's say 10 stocks, and that's enough to make a living. Google's in here. The Google L's in here. Home Depot, not evenly dispersed. You know, JP Morgan, sure, you could have that in there. Lam Research, you could have in there. And that's how you build a list of the ones with the biggest open interest. So that's what we're doing. So, and keep something else in mind. Like I said, open interest is more likely to suck it to the lower strike if you see a trend line like that. If I see the Dow Jones not bouncing and going all the way here, February 3rd, then this is less likely to hold after it works off its oversold. What's that mean to me? It means that strike prices under the market are more likely to work, combined with charts. So just want to let you know that. So that's how we play it. So now, what do I think for today? Well, let's go over it. So number one, like I said, that whole thing about, NASDAQ, there's a buy program of futures because they're short. First things first, these can have 8 million iterations of what vehicle they have against it. They could be short the NQ, they could be long the E-minis, or short the ES, or long the ES. You just can't go on one thing. I just can't tell you there's not a magic bullet. So let's go back over it. Where do I think we could go today? Well, number one, you're at some support. But most of the sell-offs, almost every sell-off that we've been seeing ends with a real washout. Real washout. Real washout. See the candles? What do you notice this time? The candles are tight. The candle on a 5-minute is tight. You're not getting that whoosh and then a rally. You thought it happened here, but it didn't because the YM went to a new low. So believe it or not, it's forming a bear flag. That means it could go to 60, 80 or lower. So how about the DIA, the non-24-hour ETF for the Dow Jones Industrials? That looks a little ominous, doesn't it? Oversold and stayed oversold. Going to February 3rd. Look at that. So I'm just telling you that this is working off its 15-minute oversold really poorly. If this doesn't bounce on the left, then this bear flag is more likely to break down, even though there's a lot of open interest up here. So just want to show you that. So believe it or not, if I jump back on, I'll be away from the desk probably till 3. We already made our money. But the lower this goes on the left, the more likely this breaks to the downside. How about the NDX? That's a little more sloppy. But if the RUT doesn't bounce and the DIA doesn't bounce, then I think the probability is that all of them at the minimum test that low. At the maximum, they go all the way down to here, filling the gaps. So that's what I'm looking at. I mean, you see it on the left. Now, keep in mind, I traded with a day trading firm for 9 years. 800 people. I was in the top 5 out of 800 all 9 years. So what do you see? Well, what did my boss do? Well, the SPX is down 53. He made us take off the net change because he didn't want us to think about net change. He just wanted us to care about direction. So just keep that in the back of your mind. Before you say, oh, you're already down 50, you got to bounce. Just keep in mind that just because it's down doesn't mean it has to stay down. But I'm not doing anything for an hour or two. I want to see how this works off the hourly at the first line of support. That's all I'm doing. The hourly at the first line of support. That's all I'm doing. So, but just keep that in mind that if you combine that the banks look bad on the opening, which we called, I'm telling you right now, I know everybody knows how to play on the long side. You got to learn how to play on the short side. A trend line is a trend line. When this was going up, I told everybody, look for the trend lines, at least on a 15-minute. There. Bear flag. So when these broke, it was more likely the SPX was going to break, which meant that it was more likely the NDX was going to, or the NQ was going to break the 15-minute trend line, which is what it did. Now, what do? Well, like I said, I think all bets are off when you're oversold at support. So I'm doing nothing for the next hour. Now, after the next hour, I'm probably going to look to play it to the downside if the Dow transports and the Dow Jones Industrials are on their low. I don't see any reason to play it on the upside. So that's where I am. So that's the way I look at it. Like I said, though, the advanced decline really in the grand scheme of things is not down that much, 900, but it's stunk for a lot of days. So right now, what am I watching? I'm watching the oversold at support. What's that mean to me? I'm not touching on the downside when it's oversold. So if you're wondering what we're talking about, we do this all the time about probability. I'll show you what we're talking about. Here's the NQ on an hourly, oversold. At support, this was drawn before the opening. On the right, ES, oversold. While it was oversold, it's working off its 15-minute poorly. So you have an oversold at support on an hourly, but a 15-minute is working off its oversold really poorly. What do? You go to lunch. That's what you do. You take your profits, you go to lunch, and I'll be happy to trade them later because you're oversold at support. Advanced decline never looked that bad. That's why we took our profit. We're already out. So just keep that in mind. We're out. So, and I don't plan to get back in, but if this YM is all of a sudden only down 430, yeah, heck yeah, I'm not going to be short. I'm not even going to think of shorting rallies. So that's why I'm doing nothing. So that's where I am. Like I said, advanced decline never looked bad today. Remember, it bounced here also, and the ES went down another 30. So today it's definitely led by a narrow group on the downside. The banks. Like I said, Nvidia never looked bad. So if you want to play it up above the market, try to combine that it also stopped going down when the NASDAQ tested lows and it got over the ATR trailing stop. So you had 1, 2, 3 reasons. Relative strength, broke the ATR trailing stop, and the open interest. So you're combining it with a number of things. That's all I mean. Combine them. Try to have 3 reasons. And that's the whole thing. I just can't stress another thing. When you're oversold, but you're at support, it's not as likely to work. When you have a trend line with no support, it's more likely to work. That's why it went down fast. There was no support. So right now, too many variables. Apple looking okay. Google, look at it. They're looking okay. I wouldn't say great. So, but I just don't see the trade when everything's oversold. If you want a 4-period chart, this will show it even better. And by the way, Peloton was another one too far from the 20. All of these were called in our room. So not everyone we did, but it avoided disaster for a lot of people. So, but this is what I want to show you. When we day trade, we use an hourly, a 15-minute, a 5-minute, and like a 1. And what you're going to see in here, we can make this bigger. It's oversold, not oversold yet. It's nothing, but it's at support. That's why you have multiple time frames. Support, oversold at support, but maybe a bear flag. All right. How about the NASDAQ? Oversold at support, and they might be bear flags. Let me tell you when I'd like to play them on the downside. And this is another thing everybody seems to get wrong. Darn right, I'll look to short it up here. But look to short is different than shorting. What it means is if it gets here, you look for the bearish reversal pattern ultra short term. It does not mean to blindly short it at a resistance zone. So just keep that in mind in there. So it means to look for the reversal pattern up here. Right here, you're in no person's land. So I'm not touching it. I don't see a reason to touch anything. So I'm not. So we're out of Visa. We're out of Google. We're out of Amazon. We're out of Apple. We're out of everything. So that's where we are right now. Now, the big question, this is what I'm going to try to drill down. Why is the Russell down if the bonds are up? And I'll tell you right now what the theory is. This was all over the video last night. The idea of tariffs or the idea of global instability hurts growth. That's why you're seeing the transports underperform. That's why all of a sudden you're seeing the German market underperform. And that's why you're seeing the bonds start to rally. So on the one hand, you have people worried about growth or instability. It's a flight to quality. That's why gold has been going nuts and up again, and Bitcoin up for that matter. So you have growth concerns, geopolitical concerns, making world markets go down, making the growth-oriented indexes like the Russell and transports go down, and making a flight to quality into the bonds. That's why the bonds don't matter today. On the other hand, if the bonds go up enough, like way up here, I think it's going to help the Russell. I just don't think they are yet. So I'm not doing a darn thing in here at the moment. You're oversold at support. So let me just tell you, though, if you're playing the long side, because all you know how to do is play the long side, Well, there's your break. So you got the oversold at support and you got the break up here. That's about 25 points. You see where to buy it because you don't know when it's going to stop. Now, we have a lot of astute people on the chart patterns mastery that buy here versus the low. Or they buy on this candle, taking back half that red candle with a stop at that low. But what's the moral of the story? You're buying on the way up. So that's how you stay in business for a long time. You don't buy on the way down. So I'm just telling you, that's what's worked in the long run. And don't get me wrong, you saw that trend line. Well, guess what? You got oversold at support. So guess what? The SPX might go to 6,100. Voila. It did. That's where the big open interest is for AM. And that brings me to the next thing because I have a little time to talk about it. AM options. How important is open interest? It's a good question. So AM, not today. AM, this expires tonight and settles tomorrow. It stops trading tonight and it settles tomorrow based on the opening print. That's like some algorithmic thing. Where's the open interest? Well, we know it's 6,000, 6,100. So the next thing you might ask, well, what's happened other expirations? AM, third Friday of the month. So let's go to it and I'll show you. All we do is try to find percentages. So the percentages, it was going to go to 6,100, and I'll show you some of the other ones. Triple witching. Remember, though, you got to go to the 19th. Well, it does show the AM. Good. Does everybody see where the open interest is? I don't know about you, but it sure looks like 5,700. So it closed 57.10. But what's the moral of the story? Moral of the story is they got pulled to 5,700. Close enough. So on the way up, that's what happened. Okay, let's take October. Well, I like triple witching, but we'll do these. Which means you go to the night of the 17th. Remember, you're looking at it, does AM pull it? And that's all we're doing, this kind of stuff. By the way, just so you know, because it's not in any emails you get, the President's Day sale applies to the Chart Patterns Mastery Room as well, just so you know. All right, where's the open interest here? 50. Why didn't it go to 50? Because, let's put it this way. It was 78, and if the markets look bad, it was going to trend toward the 50. That's all it means. It trended toward it. It's amazing on how that works. So if you saw a lousy chart, like a break, there you go. Here's another trend line. We just talked about trend line breaks. When that broke, it was more likely to go at least to 58.50. Now, if this broke up, it was more likely to go to the round number at 5,900. So I just want to let you know this stuff works as long as you combine it with thingies. November 14th, what happened? It's pre-buffering. Let's give it a minute. There you go, 59.50. Look at that. Now you might say, yeah, but how did you know it wasn't 6,000? I mean, that's almost similar to now, except now 6,100. Well, let's go over and look. So you go to 6,000, 56,058. Everybody and their mother thought it would stay at 6,000. Why would it sell off? Well, you got to combine the charts. And what did the charts tell you? Guess what? Another bear flag. Yep, another bear flag. There you go. Trend line break. Bear flag. And it trended toward the downside. That's the whole point. It broke and consolidated. It broke a trend line, then you had a bear flag under the trend line. So what makes you think it's going to 6,000? It's not. So it went to the gap. See the gap? The path of least support. So always combine it with charts. Try to have 3 reasons to do a trade. That's all I'm saying. Like I said, advanced decline sort of bouncing. I'm sure the Visas are bouncing. I mean, they got pummeled. The Dow bouncing. So what makes you think the markets wouldn't bounce? So we were talking about the trend line. So it sold off to support, got oversold, and then you initiate using an ultra short-term chart. Work like a charm. Look at this. SPX. There you go. There's your 10 points. Right there. Yep. Oversold at support, and you combine a trend line. So I hope that helps you. And like I said, heck, maybe there is a big short in the NQ. Well, guess what? When you're oversold at support, it's much more likely to work than when it breaks a trend line to the downside. Like I said, we made our money on the downside. It got oversold at support. So we're done shorting for now. Now later, sure, if it gets up to here and I see a reversal pattern, I got to see that reversal pattern. If you go back to what I showed you, and you go to that on demand, your key later in the day today is the break and the consolidation. If you see a break and a consolidation, oversold down here, it got up to resistance, and then you look for that ultra short-term reversal pattern. I'll give you, for instance, you see the break, you see the oversold right here. See that? You have it over here. Oh, what happened? It rallied. How do you know when to short? When it breaks the trend line on the ultra short term. Look at that. There you go. That's when you initiate. Because you don't know if it's going to go like to the moon. You got to look for that reversal pattern. So that's what we're doing. And also, don't get me wrong. If I start to see the Dow act better, I mean, the Russell's already where it was near February 3rd. I'll look for some Russell stocks to buy. But we have to look for more tells than that. If I see the Walmart go up, because that led to the downside, and I see the Peloton start to rally, which it has, yeah, that's going to help sentiment. The advanced decline, like KC says, definitely helped too. Definitely. So this is a narrow sell-off, just like yesterday was a narrow rally. So you see the trend line. So that's why I told you don't short yet. If you don't want to buy, that's fine. But you don't short when you're oversold at support and you break a trend line to the upside. That's all I'm saying. And also, I'll show you something sort of bizarre. Like the Russell's down. We have a list of long ideas. They are probably doing crappy. But believe it or not, some are up. Now, we talked about buying the OAH. I told you I liked Lamb Research. Starbulk, I have no idea why it sold off on earnings. It's a shipping stock. I sort of like it, but that brings me to another misnomer. If you like a stock and it has a bull flag and it fails, it's really hard. You don't have the same reasons to buy it. Now, somebody on our site correctly called Papa John's. I was talking about Papa John's goes down after the Super Bowl. Well, guess what? It retained that bullish structure even after the Super Bowl, and now you have takeover rumors. So if it retains a bullish structure, buy it. If it breaks. Starbulk's a little rougher because it didn't retain the bullish structure, but now it's reclaiming it. Very sloppy. But I sort of like the tankers or the dry bulk. So we're actually going to look at those for swing longs. And like I said, we didn't touch Apple. Now, you might say, I thought you thought Apple has big open interest. Yeah, but the chart doesn't look bad. That's the problem. That's why we got out. So it's at resistance, but it just is acting great today. So there are rumors that Tim Cook was seen at the White House. So I'm not touching Apple. We're out of it. We're out of Google. So, and let me just show you what stocks are holding up the best at the moment. The ones with the biggest buybacks. It's amazing. Yeah, it's amazing. Now, you might say, I thought Walmart has a buyback. It does. A lot of times it doesn't kick in till the day after earnings. So just keep that in mind. Well, Kava, I don't know if somebody else mentions that. You mentioned it as a bearish idea. It was a great idea. Bear flag. Now it's oversold at support. You had your move. But that was a great idea. I think it was you that mentioned it. It's a great idea. A bear flag at support. So, and it worked. I mean, it was a bear flag. Now it's at support. Now I wouldn't touch it. It was a great idea. Now, no idea. But I'm just telling you what's happening is a number of these stocks are going to their 20. All the ones everybody's chasing. Now, if the momentum's going down, does that mean Tesla's going down? No. I think Tesla is very politically charged and news headline charged. I think it held support and it held resistance right in that zone. So now I have no idea. I would just trade it intraday. If you see it over the ATR trailing stop, I'd buy it. And if it's under it, I'd sell it. And that's where I am in Tesla. You were right, though. That was a great call, Pete. I have no, I have no problem giving props. Now, let's just go over it. I have 5 minutes, Pete. Let's say you were bearish on Kava. Now, that's a tough stock because I know it's been in a big old uptrend. But let's go take it on a 4-hour chart. So you saw this. The problem is you had to short when it broke because you didn't know yet whether it would sell off. So that's a tough one. It did work off its oversold by getting overbought still in a downtrend. Maybe that day. So let's go exactly to that day. Could we have timed a short entry? That's what you want to know. Right there. So let's go to that day. That's on February 18th. That's rough because it gapped down. But let's just say you're bearish right here. Let's just say you're like, they're going to start taking the air out of these stocks right here. So could you do a spread under the market right here, February 18th? So let's go. Well, that was, a couple of days ago. Well, let's go to February 18th. And thanks for showing this again. It's a great call on your part. The key is, just like my day trading boss said, you take your hand off the net change. And as you see the market stabilizing, all right, there's Kava. Let's take the chart. Well, you see it slowly started selling off, like you talked about. So you said it's overbought, and you finally got some semblance of a reversal. So that's February 18th. So now you're like, well, if I'm right, where's it going? Well, it's probably going at the minimum to that support, 125. Could you play something around 125 for Friday? So you're talking about it already started rolling over. So, let's see. 135, 125, 115. Now, that's giving you a lot of, it's in the money. I like doing butterflies in the money. So you see that, 265. That's one way to play it. So where is it today? You know where it is today. But just keep in mind that if you're real bearish, you just break this wing. You make it the 120s. Yeah, that would be better. So if you're new in here, a broken wing, how many times have we talked about it being too right? This way, you're buying a 10-point wide and selling a 5-point wide to pay for it. If you're too right, it goes to $5. If you're wrong, you lose $277. All right. What happens if you just bought a put spread? Well, the problem is you only have 3 days. It's really tough to buy an out of the money because you have, time's working against you. So let's say you want to buy the 135, 130. Yeah, you could do that. That's another way to play it. Or let's say you're real bearish and you're like, I know they're going to kill it. Like you did. You were right. Do you buy that one? Well, the problem is it has to go down 4 points just to break even. That's why I like doing the butterflies, because it didn't have to do anything to break even. So where is it now? You don't want to know. No, we know it's like 117. 117. So that broken wing fly went to $5. In fact, it went even higher because there's still some premium. Let me just show you. Where's the 135, 125, 120? At 560, you doubled your money. Plus, it never was out of the money. Yours doubled also, but that's why I like playing them like that. So, like that. Now, you might ask, well, why don't you just play it for the next week? That probably includes earnings. You could do it that way. And, buy cheap puts, figuring they're not going to lose premium. So I hope you found this rewarding. Take care. And Pete, thanks